And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the show. My name is Al Gordon, and as always, I'm working on your financial freedom. I was tempted to say we're working on your financial freedom because on today's show, I'm going to dig into the mailbag. I'm going to take a look at some of the great emails that have been sent to me by Lifestyles Unlimited members, by non-Lifestyles Unlimited members, by people that listen to this very radio show. And you're going to find that we have some great dialogues. As a matter of fact, there's information contained within these emails that will benefit you. To kick this thing off, what I'm going to do is I'm going to go to a longtime email contributor to the show, a guy by the name of Daniel, who happens to be a Lifestyles Unlimited member. Now, Daniel and I, we have a connection that started, I don't know, a couple of years ago, and it started by sending emails back and forth. Now, if you recall last week, I actually dedicated an entire show to an email that Daniel had sent out. And if you don't recall the show, what we were talking about was, well, actually what Daniel was talking about was that people his age group in their late 50s only have about $235,000 in their 401k accounts. Yeah, that's it. Now think about this. Think about this for a second. You're in your late 50s. I'm in my late 50s, so I can, man, this is me, right? And if I'm looking at a 401k, which I don't have, by the way, I don't have a 401k, but a lot of you out there, you have 401ks. And if you're looking at a balance of $235,000, you should be very, very concerned. Yeah, you should be very, very concerned because let's just do the simple math. Let's just assume that it takes $50,000 a year to run the economic engine of your household. Yeah, $50,000. So if you retired today and started living off of that money, how long could you go? And the short answer is you wouldn't even make it 5 years. You'd run out of money. And I'm not even taking into account inflation or anything like that. I'm just giving you some raw numbers. What that tells me is that you can't retire today. You need to keep going because you need to figure out how long you can live, and you also have to figure out how long you will live. Yeah, there's no expiration date stamped on your left or your right hip. It's just not there. It's not on my hips. I doubt if it's on your hips. I have no idea how long I'm going to live. Daniel has no idea how long he's going to live. You don't know how long you're going to live. And here's the point he wants you to walk away with. If you were to retire today, would that money last throughout your remaining lifespan? Yeah, Daniel's thinking it's not going to happen for you. And these are the kinds of things that we talk about on the email. So one of the things I said on the show was I was commenting about Daniel's current situation, and I believe that he's like one property away from fully retiring. So I wasn't quite 100% sure where he was at because I didn't send back the email going, hey, Daniel, where are you at right now today? I'm just going off of previous email traffic that I've had with him. And he fired back. He said, hey, man, everything is good here. Collecting electronic mailbox money. Yeah, electronic mailbox money. You have no idea what that is, do you? You've never heard of that concept before. Okay, let me explain to you what electronic mailbox money really is. It's this concept where you make investments into real estate assets, and these assets start paying you on a monthly or a quarterly basis. Yeah, and when those distributions come in, they usually come in an electronic form because that's where we've moved to with our monetary system, right? We've moved a little bit away from a paper system more to an electronic system. So in the old days, what would happen is we would go to the mailbox and we would open the mailbox, maybe get that little squeaking sound when you open the mailbox because you forgot to oil it, right? Okay, and you reach in the mailbox and you pull out an envelope. And as you open up that envelope, inside that envelope is a check made out to you. Yeah, we used to call that mailbox money. We don't get much mailbox money anymore because most of this stuff comes in electronically. But here's the thing I want you to fully understand that came from Daniel's email. Currently set to retire in 2026, but you never know. Okay, so let's back up a step here. 2026 is, well, that's a couple of years away. It's almost 4 years away. I mean, technically it's November of 2022 right now. So, okay, let's call it 3+. Is that fair? I think that's fair. So Daniel's current trajectory has him going another 3 years, doing what he's doing to trade time for money, but it's not all that bad. It's not all that bad because let me explain to you what happens as you transition towards retirement. You start having more available cash so that you can actually start changing your lifestyle a little bit. Now, you haven't fully retired yourself, but you can work on that lifestyle. So here's what Daniel's doing for a lifestyle. He said, several months ago, I booked a cruise for February. Later on, the Expo was planned for the same weekend. What's up with that? Okay, so the funny thing was Daniel and I had actually planned to meet at an Expo event that we did in 2021 after things started opening up. We were actually able to put our Expo event together. And you're going, what is Expo? Okay, Expo is an event that we throw for Lifestyles Unlimited members and non-members. Anybody can come, and it's a weekend where we coordinate, we educate with each other, we network with each other, we get our minds wrapped around our real estate businesses, and we share information with other people. It is a phenomenal event. And I was actually looking forward to meeting Daniel at that expo, but if I recall correctly, he had been on another cruise. He went on a cruise with like 20 of his buddies, and so he wasn't able to make that expo. So this time he booked the cruise. We set the expo schedule, and once again, Daniel's not going to expo. So I don't know if I'm ever going to meet this guy. This guy might be Harvey the White Rabbit. Hey, we are in the mailbag today. I am actually pulling out some emails that I've received from you, and these are some great emails. The email we're going to talk about right now really is from the Lifestyles Unlimited community. This is a group of people that are connected through this Austin-based membership group. And I think there's about, I don't know, if I remember correctly, something like 800 or 900 people that are on this email chain. And we have a Lifestyles Unlimited member that manages the email chain for us. And it's really a great way for us to communicate and to connect with each other and to stay current on information, which leads me to the email. This email caught my eye because this email talks about some of the fundamental things that we do in our properties. And this email can affect either single family or it can affect multifamily assets. So why don't we just get into what the email says, and then I'll give you the feedback on what people said about the email. How's that? Is that fair enough? Okay, let's do this. Happy Monday, crew. Obviously, this came in on Monday, right? So Jason writes, and he says that Dave mentioned, now this Dave guy is one of the guys that we call a life changer. Yeah, a life changer. What's that? What's a life changer? Okay, I guess I'm technically a life changer. I'm technically a life changer, but I don't educate our members in the 16-hour course that every one of our members goes through. We call those guys for sure life changers, because when you're done with the 16 hours with the guys that provide that educational opportunity for you, they will have changed your life. You will have received all the information regarding the Lifestyles Unlimited map, the roadmap that we use to get from not retired to retired, and then we use it to work on our lifestyle. It's a beautiful thing. So Dave is one of the 5 guys that actually provides that educational opportunity. So Dave mentioned in his 2-day class, that's what we call the 16-hour class. We call it a 2-day because it takes 2 days to get it done, that he uses butcher block on all of his rehabs. So I'm looking for feedback from the group on that option. I'm currently doing a rehab in the Spring, Texas area. Home value is expected to be about $260,000 with rental pricing about $1,800 a month. So here's Jason's questions. The first question, from your experience, do you think that installing butcher block instead of granite would have a negative effect on the home's appraisal value? Now, this is a very good question, because isn't this one of those things that you think about in your personal residence when you select materials? Do you select materials based on, if I buy this material to do the improvement. It will bring greater value to the property. You might do that. I know I do that in my principal residence. When I'm looking to upgrade, I look to materials that will bring greater value to my principal residence. But when I'm looking at rental property, you heard me correctly, rental property, I'm looking to do the same thing, but I also have to control my costs. So there has to be a risk versus reward component to doing something that costs more. Does that make sense? And I think that's what he's kind of alluding to here. And then he says, from your experience, is it worth going with butcher block when considering resident abuse? Ooh, resident abuse. That's a tough word, abuse. Okay, what he's talking about really is fair wear and tear. Yeah, fair wear and tear. So let's get into some of the answers that kind of came back on this group email. So Steve writes, he says, I personally wouldn't do butcher block because it takes considerable effort to maintain, and someone's going to set a hot pot or a dish or a cigarette. Well, I don't allow smoking in my units, but that doesn't mean people won't cheat and smoke in the unit, right? Okay, it is what it is. He says hair curlers or whatever it is within 3 days of moving in. I'd go fancy Formica or more likely quartz, which may be cheaper than granite if it looks good and is a good price. Yeah, you know what, Steve? I think quartz is an excellent option. It looks beautiful. It's extremely durable. And sometimes you can get quartz for a much lower price than granite. But make sure you're shopping around. Shop your materials. And then Chris chimed in. Now Chris is one of these guys who also is a life changer. Yeah, so one of the 5 guys that's a life changer, he's on this email chain. Every once in a while he chimes in. And this is what Chris said. He said, look, I've done both, and I've been happy with both, and I'd do both again. No negatives in my experience for butcher block and appraisals. Residents have loved both. Now, this is what I know about Chris. Chris is going to take a look at what comparable properties are offering in the neighborhood that he's doing his renovation in. Yeah, he's going to take a look at what they're offering. Are they offering granite countertops? Are they offering butcher block countertops? Is quartz all the rage? What is his competition doing? Because he needs to make sure that he's doing as well, if not better, than his competition. Okay? And when I say better, we don't spend more money to be better. We would spend the money to be as good, but we don't need to spend the money to be better. But if we get a great deal on something, being better is totally fine. Does that make sense? I know it makes sense to you. All right, well, that ends the argument on granite versus butcher block. The bottom line is choose the material that makes sense for your rehab project. If everybody in the neighborhood is doing butcher block, it's okay to do butcher block. Butcher block is not that hard to maintain. And if somebody does damage the butcher block, yeah, you can have a crew go in there and sand it down a little bit, and that eliminates most of the damage, and then you just refinish it. And it's good to go, and it looks brand new. I know people that have butcher block in their properties, and every time they do a turn, that's part of the turn. Oh, what's a turn? A turn is when somebody moves out, and then you have to make that unit ready to be leased to the next family that's going to move in, or the next individual that's going to move into that property. Okay, I think I've beaten the countertop thing into the ground. Let's see, what else do we have here? Hey, Dusty. Dusty's part of that group. As a matter of fact, Dusty's the guy. He's the guy that leads this group. And he shot out an email the other day talking about quarterly apartment price drops for the first time since the start of the pandemic. Yeah, this is interesting stuff. So he shot out a couple of quotes from CoStar. Do you know what CoStar is? Okay, CoStar is one of these entities that does a lot of research. In the commercial real estate markets, of which multifamily is a subset of the commercial real estate markets. Now, we don't invest in all forms of commercial real estate. We invest in multifamily apartment buildings. And the reason we do that is because we know that everybody desires a place to live. And most people in America are willing to pay a good portion of their earned wages in order to live somewhere. And if we didn't figure that out during the pandemic, that everybody needed a place to live? Man, we weren't paying attention. We certainly weren't paying attention. All right. So there's a couple quotes here that Dusty sent out from CoStar talking about apartment prices. And I'm going to save this for when we come back from the break because this is going to make for some very interesting discussion. Stick around.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
Successful Lifestyles Unlimited member retires in 10 months.
The hardest part for me was to drop off my son, go to a job that I absolutely hated for 5 years, but know that that was a sacrifice that I needed to make, and then only be able to get to spend 2 hours with him after school before he had to go back to bed. So that's why once we started and we joined Lifestyles, we said, okay, we have a roadmap. We know what we're gonna do. And then a month later, we find out we're pregnant with baby number 2. And we're like, okay, we gotta kick it up a notch. So that's how we were able to purchase 4 different properties and replace in 10 months, replace my income in 10 months so that whenever I finished maternity leave, I didn't have to go back to work.
I think a couple weeks before baby came out is when we closed on our fourplex. And that was enough for her not to have to go back to work.
Are you ready for your roadmap to real estate retirement? Attend the online free workshop just like Carolina did. Register at lifestylesunlimitedworkshop.com.
Welcome back to the second half of the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and of course, I am working on your financial freedom, but I'm bringing on board with me a bunch of people from not only the Lifestyles Unlimited community, but from outside of the Lifestyles Unlimited community, because we're doing something called mailbag. Yeah, we're doing something called mailbag, which is me reading to you stuff that was sent to me. Now, every email that I receive, I personally answer. I do personally answer. Now, I may not get to it right away, but I will personally answer your email. If you would like to send me an email, if you would like to ask me a question about anything real estate related, send it to askal@luinc.com. That's askal@luinc.com. And I will personally respond to you. As a matter of fact, I may even use your email for an upcoming show, just like I'm doing today. So Dusty, he's the guy. Dusty is a guy, well, let's just put it this way. He's a recovering engineer. Yeah, Dusty's a recovering engineer. What does that mean? It means Dusty has destroyed his working career. He destroyed it. He killed it off. He doesn't need it anymore because he's a very successful real estate investor. He and his wife, Sandy, set apart to destroy their careers, I don't know, I want to say 5, 6, 7 years ago when they became members of Lifestyles Unlimited. Now, they live up in the greater Austin area, and they invest in real estate. They have been so successful investing in real estate, they were able to step away from their corporate careers. Now, because Dusty is a guy that likes other people and he wants to help other people, he actually started this email group that has, I don't know, about 800 or 900 of us on the email group. Now, you have to be a member of Lifestyles Unlimited, and you have to be a part of what we call the Preferred Investor Group, because that's a closed group of investors. We have to have this special group in order to do certain types of investing because we want to comply with the law. You heard me correctly. We want to comply with the law. The law says if you're going to syndicate real estate deals within an organization, you have to have a closed area for those syndications to occur under Regulation D. It allows us to avoid a lot of costly expenses that normally would come with syndicating deals. Okay, I'm not going to get into the whole syndication thing because it's not appropriate for this radio show right now. What I want to do is I want to read to you what Dusty sent out because it's going to spark some questions in your mind. It's going to spark some questions in your mind. So what he did was he was quoting CoStar. Now, CoStar is a research firm. They provide a lot of data about commercial real estate. And here's the data they provided to Dusty. Quarterly apartment prices drop. Yeah, that's what it says. Quarterly apartment prices drop for the first time since the start of the pandemic. So what is that getting at? Well, when the pandemic hit, remember we went into lockdown. We thought we were going to be in lockdown for 2 weeks. It turned out to be, 2 years, right? When that happened, nobody knew how bad it was going to be. Nobody knew what their lives would become when we shut the world down, because that's literally what we did. We shut the world down. The government decided who was an essential worker and who was not. And if you were an essential worker, then you were allowed to go to work because you were an essential worker. If you were not an essential worker, then if you could do your job from home, then you probably kept working. Now, if you were in the service industry, in other words, you were a bartender or a waitress, or you did something where you actually had to meet face-to-face with people, you were in a world of hurt. Yeah, you were definitely in a world of hurt. And at that time, we were very concerned that some of our residents, people that we have business relationships with, may have been going into a world of hurt. And we were concerned because pricing, in other words, what you can buy an apartment community for, was affected by the start of the pandemic. It was affected. Prices did go down a little bit because nobody knew. Nobody knew. All right, here's 2 quotes that Dusty sent along that came from CoStar. The first one is, United States apartment prices tracked by CoStar sank for the first time since the start of the pandemic during the third quarter, setting up a test for the once hot property type through the rest of the year. Now, some of you would listen to that quote and you would think, oh, well, Al, there's your proof right now why this real estate investing stuff, it's not going to work. Prices are going down. You can't make money when the prices go down. Hold that thought for a minute. I want you to hold that thought for a minute because I'm going to read you the second quote, okay? And let's see if that changes your thought process a little bit. The deceleration of commercial property pricing showed up noticeably among apartments. CoStar's multifamily index fell 0.5% in the third quarter. The measure of repeat sales hasn't recorded a drop in prices in that property type since the first quarter of 2020. So they're giving you all of the statistical information that supports the argument that Dusty sent. He really didn't craft the argument. He just sent the argument, right? So did that change your opinion any? You're still thinking this apartment thing is a bad way to go, right? And I'm here to tell you, this is actually the time we've been waiting for. Yeah, believe it or not. We have been waiting for the apartment industry to cool off. Kind of sounds like I just told you to go jump off a bridge that has no water under it, doesn't it? Yeah, it just doesn't sit well with you. All right, well, let me explain myself. The apartment segment of commercial real estate has been on fire. It has been on fire for many, many years. This has been one of the most aggressive growth stages that we've ever experienced, at least definitely in my lifetime. But prices are starting to cool off. And some of you think that I can't make money in real estate because the only way I can make money in real estate is if pricing is going up and up and up and up. And that's just not true. That's just one way you can make money in real estate. Did you know that you could actually buy an asset today? You could pay, let's say, $1 million for that asset. And let's say you own it and operate it for another year. And let's say the value of that asset goes down to $800,000. Have I just lost $200,000? Well, technically, no. Technically, no. Now, if I were to sell that property right there and then, yeah, I would take a $200,000 loss on the sale of that property. But see, when I buy that property, I'm not buying that property to hold it for just merely a year. I have a 7 to 10 year game plan, which can actually be expanded out to 12 plus years if necessary. And what that allows me to do is to buy and own that asset through a period which we may be going through right now, where prices are going to come down. And as prices continue to come down, I will continue to buy even more assets. I will buy all the way down. I will buy through the bottom, and then I will buy all the way back up until we reach the current level of pricing again. And then you know what I'm going to do? I'm going to keep buying. And then I'm going to take a look at some of those assets that I held throughout that period of woe. That's a period of woe. And I'm going to take a look and see how they've done. And chances are they will have recovered. They will have recovered very nicely. And if they haven't recovered yet, no problem. The game plan is I continue to operate because these assets are producing cash flows for me. The cash flows that come in are not affected by retail pricing for the asset itself. The cash flows are only affected by retail pricing for the rents. And right now, in the markets that I own assets in, rents are very, very healthy. All right, we're doing mailbag today because I've received some great emails from those of you that listen to the show. And if you would like to send me an email and ask me a real estate related question, send that email to Ask Al. That's ASKAL. Real simple there. Real simple. Ask Al, the little @ LUINC.com. LUINC stands for Lifestyles Unlimited Incorporated. And we all know what the .com stands for, right? Because that's just ingrained into our psyche nowadays. Yeah, okay. So Franklin sent me an email, and this was an email. This was a question, I should say, that was a little bit out of my wheelhouse. But like I say, send me any and all real estate related questions. Because if I don't know the answer, I do know who probably does. Yes, I'm serious about that. I probably know who does, or I can at least refer you to the right person that, in Al's opinion, has way more information on the subject matter than I do. Is that fair? I think that's totally fair. So Franklin wrote me, he says, "Hey, Al, good morning. Hope you're doing well. In your experience, what do you think about SD IRA to invest in real estate?" Now, SD or SEDIRA, SD IRA is short for self-directed IRAs. So in other words, you convert your IRA into a self-directed IRA. I don't even know how to do that. I don't even care because I don't have an IRA, but some of you do. And apparently what the self-directed IRA allows you to do is it gives you more flexibility on what you can invest in, okay? And Franklin went on to say this. He said, several gurus are using talking points and ways to push this product. Okay, so apparently other people that are out there that are talking about real estate that are gurus, I guess if we have a guru, it's Dell, our founder and CEO. Yeah, because he's been doing this for well over 32 years. That's how long Lifestyles Unlimited has been in existence. We've been around for 32 years, a lot longer than the so-called gurus. So I guess if Lifestyles Unlimited was supposed to have a guru, it's certainly not me. It would have to be Dell. So I'm going to call Dell a guru, and hopefully I don't get any hate mail after the show from Dell. So here's what I did. I responded to the email, and I told you up front that sometimes I get emails about certain questions about certain subjects that I don't feel I'm the best guy to answer the question. So here's how I responded. My fellow co-host, Mike Harrison, yeah, a little shout out to Mike there, did this and said it was the worst way to go. Yeah. Where did I get that from? I got that from Mike Harrison. I actually got that from listening to Mike Harrison's show when he did a complete show, I don't know, maybe about 3 or 4 weeks ago, talking about investing from a self-directed IRA. And this is the guy to give you the information on how to do it or not do it, because this is the guy that's been there, done that, got the T-shirt. I've never done this, so I'm not the best qualified person to answer this particular question. But I did add on some supplemental information that I learned from listening to Mike's show. And here's what else I said. The cash flow and all earnings have to go into the IRA. You can't use the money for today's needs, such as using the cash flow to retire yourself. However, I think there's another approach to doing this. If the IRA only has enough money to buy, say, one house, and the cost to take that money out of the IRA exceeds the benefit of investing within the IRA, then that might be the exception to the rule. Please understand that I have never invested from within an IRA, even though I used to have them. Okay, so That's the fairest and honest way I can address this. And essentially what I'm referring him to is go listen to Mike's show from several weeks ago. Did you know that all of our radio shows are repurposed into podcasts? Yeah, they are. Every single radio show that we do, except for the ones where we have technical difficulties and it makes the show kind of difficult to hear, we scrap those. We don't turn those into podcasts because it would be terrible podcasts. But everything else becomes a podcast. And you're wondering, okay, where do I get these podcasts? Well, you can go to lifestylesunlimited.com. And there's a tab there, right? As soon as you get to the website, there's a thing that says radio. When you click on radio, it's going to show you all of the available podcasts that we have in our inventory. You can go back years. Literally, you can go back years and listen to content from years ago if you want. You can also subscribe from your favorite podcast service. I mean, I'm a Spotify guy. I'm not endorsing Spotify, but that's where I get my podcasts from. And I get the Lifestyles Unlimited Real Estate Investor Radio Show and the Del Walmsley Radio Show right there. And it's just super easy. So you can do it too. Let's get into a slightly more complex question. What do you say? All right. Good evening, Al. Now, this comes from Adam. And he said, first off, I wanted to let you know that I really enjoy listening to your show. It's enlightening, informative, and entertaining. My parents joined Lifestyles Unlimited in 2020, and after a year, they began recruiting me to join, but I honestly thought they had lost it. And I get that. I totally get that. All right, back to Adam, though. I took it upon myself to research the heck out of Lifestyles Unlimited to try and prove to them they need to run away, and a big part of my research was listening diligently to the Lifestyles Unlimited podcast. Uh-oh. Well, let's see. What else does Adam have to say? Well, I can honestly say your podcast, as well as the other hosts, convinced me that not only was Lifestyles Unlimited not crazy, I needed to get in quick. I officially became a Lifestyles Unlimited Preferred Investor Group member exactly 1 year ago today and received my first distribution check today. Good job, Adam. That's awesome. Mailbox money, or it might have been that electronic thing, right? I am passively invested in 5 multifamily properties, passive investor certified, and now lead certified and looking for my first deal. I guess my parents always know best. Yes, Adam, sometimes our parents, they actually do know what they're talking about. Trust me. I finally realized that in my 40s. Anyway, so on to my question. On your October 13th episode, Learn the Fundamentals of Real Estate Investing, you mentioned Mike had cashed out his 401k and was able to reduce his tax burden significantly. Recently, I had Henry. Henry's one of our vendors, and he's a real estate attorney, but he's cracked the code on helping you not pay a penalty when you take money out of your 401k or your IRAs. Yeah, you don't have to be 59 years and a half to do it. Yeah, it's totally legal. Anyhow, he had Henry execute the transfer of my 401k to my wife through the QDRO process. That's the process that Henry uses to avoid the 10% penalty. I guess I just should have read his email because it tells you exactly what Henry does. But I have not yet pulled the money out. So technically, my money is still in the 401k. Before I cash out, I would like to see if what Mike did that might help me reduce my tax burden. And yes, I do remember a little over a year ago you saying the stock market was about to crash and that we needed to get out. Unfortunately, I did not heed your advice back then. It's okay, Adam. It's totally okay. You know, there's a lot of people that thought I was a crackpot when I was telling you that the stock market was poised to go down, but it did what it was going to do anyhow, right? Okay, it is what it is. Can you put me in touch with Mike or forward my contact information so I can see if I can follow his map? So I shot back and real simply, I just said, hey, great job on the passive investing. Distributions are a beautiful thing. But what I pointed out to him is that Mike is actually one of our Lifestyles Unlimited ambassadors. He lives up in the greater Austin area. And he's an ambassador for Lifestyles Unlimited, which means he devotes some of his free time to helping members out. And one of the things that Mike loves to do is he loves to share information about things that have worked very well for his investing strategies. I've had Mike on the show. He's actually talked about this process before. And the key thing is this. What Mike did was he found a way to limit, first of all, the first like $80,000 of the money he took out of his 401k came out tax-free the way he did it. And then the rest of the money was only subject to something like, I don't know, a 3% rate or something crazy. Maybe 3% is too low. I think that's too low because his effective tax rate for all of his taxes was 3%, so I might be getting that confused. But here's the big takeaway. No matter what your situation is, no matter where you have your money parked right now for investing, there is a way for you to tap into that money. And there are Lifestyles Unlimited members that know the most efficient and effective way to advise you on how to take it out. As a matter of fact, our mentor team, they know all of these tactics. They do. They know all of these tactics, and they can help you too. So the point I want to make based on this email is that you are not alone. You are not alone. When you're part of the Lifestyles Unlimited community, you are not doing real estate investing by yourself. Because if you were doing it by yourself, you would have to do everything yourself. Yeah, we want you to focus on your business as an individual, but we want you to have a lot of people helping you along the way. Yeah, remember yesterday's show? Remember yesterday's show when I talked about building your team? It's very important for you to have that team. That's why I spent the entire show talking about different entities that should be a part of your team. Because once you realize that there are probably, let's just call it maybe a dozen different entities out there that you need to have relationships with, you realize that every time you bring a quality entity onto your team, you have just freed up a big chunk of your time. And that's what this is all about. This is all about regaining control over your life. If you want to do exactly what I do, if you want to do what everybody on these emails is doing, go to lifestylesunlimited.com. Get signed up for a free workshop, and let's get you going.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.